When it comes to risk and reward, you need to consider where we are now and where we were yesterday. It's not just about today's action. You have to package it in context with a couple of days of action. And very quickly, we can see yesterday we talked about turning our minds around once we got the uh-oh signal at 14. And my contention is that obviously we've had a squeeze trade that has captured some traders and taken them to new highs. We've pulled back. We said we don't think we'll get a plunge today. Likelihood that this 37 will be a key support area. So far that's held. Anybody that took the one finger salute, the 42s, came in, you got to start to think about profit taking near the end of the day. And depending on whether this gets goosed or not, we'll get another new high, but probably not. So all we try to do is find logical places where the market is going to trade within for the next hour or 2 hours and look for opportunities. And obviously buying yesterday for position traders who buy the 14, 15, 16 area, a much better buy than anybody who bought today in terms of risk and reward. And Lee Charlie, who likes to buy in here, does no better, really, than someone who will just be patient and let this play out and take another whack at it at a lower number, a little closer to truer support. And that's the beauty of being able to walk away for a little bit and not try to guess if you don't want to, and take parts of the day and then look for timing ideas like this for better buys. And I've got 41.5 as the demon, and my guess is that that's probably fairly good resistance into the end of the day. And if not, so be it. It'll get goosed by the boys and make another slightly higher high. And that's the art of trading. A little double in here. We said earlier, 37 likely to be a reasonable support zone. And anybody who shorted earlier, we said good possibility. It won't go as far as you think it will. Got the 10-minute chart on. That was what we've been looking at. 60-minute chart we're looking at. 30-minute chart. Tough to take this kind of market down until we start to rotate through these ideas. So range trading. And usually the last entries are the weekends, and they've been shaken out for sure. And in my opinion, that's the art of trading, understanding when there's a time for a contra and when there's a time for contras to end and then get another leg pushing back up towards the previous high to test it. And it's all about timing. A day like today is not going to plunge, not after this ramp. It takes time. So our support, 37, and it's just for day trade. Got other charts that we don't show that clearly showed why we thought this 37 to 38 should be support. And if not, then obviously we could pull back and test the 35 to 34. half hour to go and nothing to do but relax at this point. If you put a trade on here for another couple of points, never let it run against you. And we have the idea that today is largely done. It was done early. How much more effort it took to get that last point in time, and then the drawdown. So if you can get that primary trade and get 80% of the day's range in there fast, start taking your risk early, that's the name of the game. The rest of the time you can go do what you want. There's a different way to trade. I'm trying to teach a few people how to do this. Anybody wants any suggestions? Give me a holler. I love the teaching part of this business.